Is now the perfect time to invest in commodities? Rick Rule argues investors are in a sweet spot, while Heather Exner-Pirot warns of China's mineral dominance. Discover their strategies for navigating market tops and geopolitical risks. Don't miss these critical insights. Today on Financial News in Review, we will summarize the following videos. From Adam Taggart, Thoughtful Money, we have Rick Rule, we're in a real sweet spot for investors. From Kitco News, we have China's mineral manipulation strategy and dominance threatens the West, Heather Exner-Pirot. Welcome to the channel Thoughtful Money, hosted by Adam Taggart. In today's episode, we're thrilled to feature Rick Rule, a veteran and highly respected natural resources investor. Rick's expertise in commodities and market trends makes him a compelling guest as he discusses the sweet spot for investors in the current market landscape. The core thesis of this video is that we are in a prime moment for investment in commodities, driven by current market conditions where commodities have outpaced company stocks, and companies have maintained financial discipline. Rick Rule believes that this favorable environment offers substantial opportunities for investors, contingent on a non-recessionary global economy. Here are the key points discussed by Rick Rule. Current market dynamics. Rick highlights that many commodities, including precious metals, cocoa, and natural gas, have had a good year. He attributes part of this success to a reversion to mean, particularly in industries that were previously underperforming, such as precious metals. Precious metals and industrial commodities. Fear around the purchasing power of fiat currencies has driven up the attractiveness of precious metals like gold. Industrial commodities are benefiting from growing demand due to the increased standard of living in previously impoverished regions and significant underinvestment in sustaining capital for natural resources. Future trends and predictive metrics. Rick notes that precious metals market share in the U.S. is below historical averages, suggesting potential for growth. Key drivers include continued quantitative easing, budget deficits, and entitlement liabilities. Rick Rule made the following predictions. Continued bull market in precious metals. Rick predicts that gold will continue to rise as a hedge against declining fiat currency values and relentless government budget deficits. He also expects that the market for gold stocks will eventually catch up to physical gold, due to increasing retail participation and central bank purchases. Energy sector growth. Rick sees a long-term opportunity in the energy sector, particularly in oil and gas, driven by underinvestment in sustaining capital despite high free cash flow in this industry. He emphasizes that alternative energy, while significant, has not dramatically reduced the market share of fossil fuels. Rick Rule underscores the significance of the current sweet spot for commodities investment, driven by stable company pricing relative to commodity prices and past underperformance. He advises viewers to remain attuned to the long-term opportunity in both precious metals and the energy sector, emphasizing the importance of investment discipline and understanding broader economic trends. In this latest Kitco News interview, host Jeremy Safford sits down with Heather Exner-Pirot, Director of Energy, Natural Resources, and Environment at the Macdonald-Laurier Institute. They're diving deep into Canada's recent decision to block the sale of critical rare earth minerals to a Chinese company, a move with far-reaching implications for global resource security and political maneuvering. The central thesis of the video is the urgent need for Western nations, particularly Canada, to secure and develop their own critical mineral supply chains in response to China's strategic manipulation and dominance over this sector. Exner-Pirot discusses Canada's recent decision to block the sale of rare earth minerals to China and explores the broader geopolitical and economic ramifications. Here are the key points discussed by Heather Exner-Pirot, Canada's block on rare earth minerals sale. The Canadian government blocked the sale of critical rare earth minerals from Vital Metals to a Chinese company, citing national security concerns. China's dominance and history of leveraging its monopoly on rare earth minerals have been ongoing issues, prompting Canada's decision. Challenges for junior miners. Canadian junior miners face difficulties accessing capital, exacerbated by strict regulations on Chinese investments. There's a need for a balanced approach that not only blocks detrimental foreign investment, but also supports domestic miners through financial incentives and regulatory reform. China's market manipulation. China's strategic flooding of the market with rare earth minerals to depress prices and squeeze Western miners. This has created a dependency and hindered new Western market entrants, particularly in sectors like battery metals and rare earth elements. Strategic actions by other nations. Countries like Japan and South Korea have pursued long-term resource strategies to mitigate their energy and material resource dependencies on China. The U.S. has been proactive under the Defense Production Act, investing in allied mineral projects in Canada and Australia. Heather Exner-Pirot made the following predictions. Canadian government action. Exner-Pirot suggests that Canada will likely need to develop more comprehensive strategies, including increased investment in mining sectors and refined regulatory frameworks to boost domestic production. Global mineral supply chain dynamics. She foresees increased collaboration between Western nations to secure their supply chains and reduce dependence on China. Future incentives and policies may align more with these geopolitical strategies, potentially leading to shifts in market dynamics. Heather Exner-Pirot concludes by emphasizing the necessity for strategic action from Western countries to secure their critical mineral resources. She advocates for a more balanced approach that involves both protecting domestic interests from harmful foreign investments and actively fostering a robust local industry capable of meeting global mineral demands. The critical message is clear. Western nations must wake up to the realities of geopolitical resource control and take decisive steps to ensure their economic and security interests are safeguarded. Rick Rule highlights a sweet spot for commodity investments driven by stable prices and disciplined company stocks. He sees immense potential in precious metals and energy sectors. Meanwhile, Heather Exner-Pirot warns against China's strategic mineral control and stresses the need for the West to safeguard their critical mineral resources. Both discuss key incentives and policies, but differ in their focal points. While Rick emphasizes long-term opportunities in commodities, Heather focuses on geopolitical risks and the urgency for Western nations to develop resilient mineral supply chains. Thanks for watching Financial News and Review for June 23rd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.